operations at the Central Bank. And to her right is Ms. Jamila Aline, Senior Legal Officer in our Legal Services Department. I should also like to recognize our country manager, Ms. Kozel Fraser, and our administrative professional, Mr. Charlene Daniel. Thank you, Charlene. Also in the room is the Chair of the Bank of St. Vincent and the Grenadines, Ms. Vieira. I'd like to recognize her as well. And the Managing Director, Mr. Derry. And I think everybody knows these two individuals very well. I also want to recognize in the room Mr. David Standish, who is the one of two receivers appointed by the Central Bank to oversee this particular resolution in respect of First St. Vincent Bank Limited. Of course, I especially want to thank members of the media who have joined us today to carry this press conference live. And it would be remiss of me, very remiss of me, not to recognize the distinguished former Deputy Governor of our Eastern Caribbean Central Bank, who is also in the room, Sir Errol Allen. As you know, Sir Errol served for 22 years in the capacity as Deputy Governor, and so I want to especially recognize him as well. With those introductory remarks, I propose to quickly recap, summarize what actions have been taken before we field some of your questions. Last Friday, May 26th, the Eastern Caribbean Central Bank, under the powers enshrined in the Banking Act, placed First St. Vincent Bank Limited into receivership. That decision was not taken lightly. That decision was taken in the public interest in pursuance of the Banking Act. And I want to be very clear. The decision to put a bank into receivership is a very serious decision, has to be predicated on the public interest, and that is precisely what we have done. In our deliberate judgment, the First St. Vincent Bank was failing, and there was no prospect, immediate or near term, of a turnaround in the situation. As a consequence, the Eastern Caribbean Central Bank acted in the public interest, particularly in respect of depositors and creditors, to ensure the preservation of financial stability. That means that First St. Vincent Bank is now closed, and in due course the banking license will be revoked. That also means, and that's the good news, that the depositors and customers of the First St. Vincent Bank now have the ability soon to continue to resume their banking services through the Bank of St. Vincent and the Grenadines, which has graciously accepted our invitation to acquire certain assets and liabilities of First St. Vincent Bank. Now, I want to be very clear. When we make a decision in respect of a resolution, we have to decide, on which institution can acquire certain assets and liabilities. And in our deliberate judgment, Bank of St. Vincent and the Grenadines was able to demonstrate to us that it had the financial strength and capacity to undertake this assignment, and so we invited Bank of St. Vincent and the Grenadines to do that. Very important for us, and some of you may be asking why Bank of St. Vincent and the Grenadines, so let me just address this now. When we make a decision about resolution, St. Vincent and the Grenadines, 1909 is when it started, an indigenous bank, and therefore I think it would have been passing strange if we did not, in fact, consider our indigenous options. That is what we've done. When you consider your options, you have to look to see financial strength, you have to look to see capacity. One of the very important things for us is the fact that the IT system used by Bank of St. Vincent and the Grenadines is very similar to the IT system, the core banking system, I should say, used by First St. Vincent Bank. Why is that important? That is important because it reduces the transition time to move the assets and liabilities from First St. Vincent Bank to Bank of St. Vincent and the Grenadines. What is that? What does that mean? It means the customers get faster access to their funds. And clearly for us, that's a big motivation for how we have structured this transaction. As you saw in the release, come June 1, Thursday of this week, customers which have been transferred or who have been transferred to Bank of St. Vincent and the Grenadines will have full access to their funds up to $100,000. I'm going to come to that a little more in a minute. But the IT system or the core banking system is an important issue in terms of how you transition, how you migrate accounts from one institution to another. And so we took that into account because that speeds up the transition time or reduces the transition time and speeds up the time at which the customers can actually access their funds. Very, very important for us. So our actions are in the interest of the public, particularly our depositors, creditors, and overall financial stability. Now, I want to be very clear that when we say up to 100,000, if a customer has $1,000 in First St. Vincent Bank, that is being transferred to Bank of St. Vincent and the Grenadines. 5,000, 20,000, 25,000, 30,000, all the way up to 100,000. And I'm saying that because it appears that some people are not clear whether it means only 100,000. Anything below 100,000 depositors we have identified will be moving. So the truth is, over 90 or around 90% of all depositors in this bank, First St. Vincent Bank, will be migrated to Bank of St. Vincent and the Grenadines. And that is good news for those depositors because not only are they moving their account to a strong institution, but they will soon have access to their funds. Now, in pursuing this resolution, we have had to not just identify an acquiring bank in Bank of St. Vincent and the Grenadines, but as per the law, to appoint a receiver to oversee the affairs of the bank. So, as of Friday, with the appointment of the receiver, the control for the operations, the winding up essentially of First St. Vincent Bank, is now in the hands of receivers. We've appointed joint receivers in the persons of Mr. David Collins and Mr. David Standish of Interpath Advisory, one of whom is here today, as I mentioned earlier. And they will now be responsible legally to oversee the appropriate arrangements with respect to those assets and liabilities that remain in the receivership. I just want to be very clear. When you do a resolution, you transfer both assets and liabilities. So on the asset side, principally, we have loans that are going to Bank of St. Vincent and the Grenadines. On the liability side, we have deposits that are going. And essentially what we try to do is to match assets and liabilities so that we could have a transaction. So for those of you who are wondering, well, I have a loan at First St. Vincent Bank, what happens? Well, in all probability, your loan is moving to Bank of St. Vincent and the Grenadines. And of course, you have your deposits moving there as well. People have been wondering, well, what if I have salary deductions or I have salaries? Those two, I imagine, will be moving and, to be able to continue to service. Because what we want to do with this arrangement is to give customers access to their funds in the earliest possible time, whether that is for withdrawals, whether that is to make payments of salary or other payments that you may have. And so we have been very thoughtful in the way we have designed this particular resolution. So we have formally informed the board and management, we did that on Friday, of the decision, and that of course with the appointment, the control of the institution now resides in the receiver. I want to be very clear before I stop, because I want to take your questions as early as possible, to just confirm that the banking system in St. Vincent and the Grenadines is sound, and banking business is continuing today as normal. So other financial institutions who are in the system here are open today and are functioning normally, and we expect that to continue. For the customers of First St. Vincent Bank, you will have access to resources on Thursday. And in case you're wondering why the delay, The delay is to conclude the arrangement with Bank of St. Vincent and the Grenadines, the acquiring institution, the systems, the transfer, the migration. Those things do take time. They've been working, the teams have been working very hard over the last few days, but they need that time to be able to do that. That is why, for example, those funds are not available today. There is time required to get those arrangements in place. The media release that we issued on Friday was fairly detailed, and so I don't want to rehash anything. Perhaps it would be best to take your questions to respond or clarify any matters that you may have. So I would pause at this moment. I'll ask my team if there's anything that you want to add to supplement what I've said before we take questions. Team, anything?
No, we're good. Yeah.
Good? Clear? All right. So, members of the media, the Fourth Estate, the floor is now open. You have the mic. You can pose your questions. Yes, please. And as usual, just identify yourself, your media outfit, and proceed.
My name is Desmarie Greenaway from the newspaper. I am just asking for the public generally because as far as I'm concerned, I think most persons didn't know what was about to happen. Our customers were aware of the fact that what happened on Friday?
No. Customers were not notified in advance, and I am not aware of anywhere in the world where a bank resolution is done, where a bank is put into receivership, that customers are notified in advance. Why is that? To protect the integrity of the transaction and to give the customers the best chance to maximize access to their resources. So obviously, when you're doing a transaction of this nature, you have to be mindful that you are putting together assets and liabilities to effect the transfer. You can't tell shareholders, board, management, customers in advance, because that will undermine and potentially unravel the transaction. I'm being very elusively clear so people understand. This is not, bank resolution does not allow us to give customers prior notice. That's a little different from an acquisition like you have seen in the region and in St. Vincent and the Grenadines, where you know this one is buying, and I suppose if you don't want to move over, you can close your account and move. This is different. This is an action taken by the supervisor because of a failing institution, and therefore to preserve the integrity of the transaction, we cannot give advance notice. So I want to just be clear on that. It is not out of disrespect, but that is how we have to approach it to protect the very depositors, to maximize their ability to access their funds as soon as possible. So that is why that is done in this particular way.
I'm hoping that that clears up the question from the customers.
Yes.
And I think you answered the other question is really that the employees really didn't know as well, right?
No, we served no. So just to be clear, again, very transparent. Our team met with the board and management on Friday afternoon, after the bank was closed.
Okay.
Yes? Our team also met the staff to inform them of. Yes?
At that time?
At that time.
Okay.
Just before we issued the release. Because we can't afford leaks. I mean, we have to be very blunt about this. If we told everybody and we told the world in advance, then the transaction could be compromised.
Yes.
So that is how it is done all over the world. This is a practice in terms of bank resolution. If you check Bank of England, wherever in the world that does it from time to time, this is how it is done. There's a particular approach where that is concerned. To preserve the integrity, as I said, of the transaction and to maximize protection for depositors and creditors.
Okay, thank you. I think that would clear up a lot of concerns that I know persons had. So
Yes.
hence my reason for asking.
No, thanks for asking.
Thank you.
Yeah. Do we have any other questions, please?
To the microphone.
All right. Damien Macte, NBC Radio.
Sorry, Damien?
Damien Macte, NBC Radio.
NBC Radio. NBC.
I know the process of receivership has its own ups and downs and its own systems, etc. But I was just wondering, for those customers who had over $100,000, what would be the status of their funds over that threshold?
Right, so thank you for the question. Those funds go into the receivership. So there are two pieces, two buckets. One bucket gets transferred to Bank of St. Vincent and the Grenadines. That's depositors with up to 100,000, that bucket. So that's most of the depositors.
Right.
But you have depositors with funds in excess of 100,000. Those funds in excess of go into the receivership. The receiver's job is to completely assess the financial condition. Obviously, we already have a preliminary view based on financials, based on our own examination. Because I should have mentioned that preceding, I think it's actually in the release, preceding the appointment, we did an on-site inspection in the last few days, right? To get the latest sort of score on the ground in the institution. But the receiver now has to do a full, complete assessment, look at the assets that are remaining in the receivership, along with the liabilities. Liabilities would be deposits, and would then have to essentially, ultimately, sell to be able to recover and to make those funds available. So the receiver has to do that work now. What are the existing assets? What are the actual values? The book may say one thing, the actual values may be another. That has to be ascertained. And then, based on those cash flows, we'll be able to make a decision about what happens when and to what extent with respect to depositors in excess of. That process takes time. That is not Thursday of this week. Thursday of this week are most of the depositors who move into Bank of St. Vincent and the Grenadines. But for the rest who are in the receivership or with amounts in excess of 100,000 that are in the receivership, that process now has to play out. Obviously, the receiver has to do it comprehensively, thoroughly, but also expeditiously, because we want to be able to give clarity as soon as possible to all concerned.
Right. Thank you for that.
Most
I have another question that's still related to what's happening. Indigenous banks in the Caribbean, indigenous financial institutions. What is happening? I have to be careful how I ask this, but I know you'd handle it. What is happening here in relation to First St. Vincent Bank? Would this be an impetus to help strengthen the financial dealings of other indigenous banks in the Caribbean?
So what we've seen is over the last several years, certainly the last 3-4 years, a consolidation.
Okay.
Meaning smaller banks are getting bigger through the acquisition of. So to be very precise, we had Republic acquire Scotia here and throughout most of the region. Then you had First National acquire RBTT. Then you had Bank of St. Vincent and the Grenadines acquire FCIB. Similar acquisitions have occurred throughout the currency union. So when we started this journey 3-4 years ago, we had 30-something banks, 34? Now we have 28, and that number is going to go down because consolidation is going to happen, is happening. That is not a bad thing. Let me be very clear. I know people will feel they have less choice. I get that. But what people want most of all is a modern financial services, strong banks, safe banks, secure deposits. One of the advantages now with that consolidation is the fact that correspondent banking relations have generally improved. Because one of the challenges with the risking, the loss of correspondent bank relation, was size. Small banks struggled because the correspondent banks saw them as too small and too high risk. with the indigenous banks becoming stronger, like Bank of St. Vincent and the Grenadines, they have more clout. They have more financial muscle to negotiate corresponding banking relations. That works to the benefit of customers here in St. Vincent and the Grenadines and across the currency union. Right? I also want to say, in addition to the consolidation, and by the way, you're seeing consolidation all over the world. Right? This is not a phenomenon unique to St. Vincent and the Grenadines or the currency union. But I also want to observe that the banking landscape has changed in the currency union, the financial landscape. Because essentially, what the Canadian banks used to do, our indigenous banks are now doing. They have had to step up to the plate, take on more responsibility, offer services as they expand. But you have credit unions in the space that are quite active, and many of those credit unions are now doing what the indigenous banks used to do. So let's appreciate the shift. As the Canadian banks have exited, the indigenous banks have taken up more responsibility for banking assets and financial services. The credit unions are doing more of what the indigenous banks used to do. And guess what? The banks will tell you the credit unions are giving them a run for their money. The competition is fierce. Well, that's a benefit to the customer. Because when you have competition, you get better pricing and potentially better customer service. Now I say potentially because none of these things are guaranteed. Right? So, while a lot has changed in the last few years, and I want to accept that and acknowledge that, I also want to say we have to appreciate how the system has evolved and appreciate the different roles of the banks and now the credit unions in respect of our financial system. So that there is still choice. Yes, you have one less bank or two less bank or three less banks, but you still have choices. And by the way, if you go throughout the currency union, it's the same story. You know, so in some countries you have two banks, here you have 3, 4, others have, you know, one of our country has one, which is not particularly a great situation, but the country is difficult for them to attract additional financial institutions at this stage.
I had about 3 more questions, but I'll just ask one.
I wanted to ask you questions. Maybe I'll keep my answers a little short. Sorry.
Okay, no, the answers are very good. The status of the Eastern Caribbean dollar. I know the Eastern Caribbean dollar is pegged to the US dollar still.
Yes.
I know there have been some discussions in the international community about changes in the US dollar, the strength of the US dollar, etc. How strong is the Eastern Caribbean dollar, and do you anticipate any changes in the US dollar in the global market would affect the strength of the EC dollar?
The EC dollar is very strong. Currently, the backing is almost 92%. So you remember what the law requires. The law requires us to be backed at any instant, any moment in time, 60%. That essentially means for every $1 in circulation, we should have about 60 cents in foreign reserves. $1 and demand liabilities, to be more precise, or period. And foreign reserves of about 60 cents or 60%. Right now, we are close to 92%. Right? So the EC dollar is strong. And mind you, we were tested during the pandemic. And the lowest we ever got to was 89.90. And it's starting to go back up again. When the pandemic broke, we were at 100%. So we're going to see it continue to increase, especially now as investment income is improving with high interest rates and that sort of thing. So EC dollar is strong. So there are no issues about that. With respect to the US will remain for the foreseeable future the world's dominant currency or the world's reserve currency. But I want to be very clear. The reason why we are pegged to the US dollar, why our framers and founders made that decision back in 1976, is because the US is our major trading partner. Recall before that we were pegged to pound sterling. One has been the major trading partner of the currency union. Therefore, if you're buying, let me break it down a little more. If you're importing from the US, you need US dollars. That's what you need. And by the way, most of the debt, of the foreign debt in our region, 85% thereabouts, are denominated in US dollars. So we have to keep US dollars. So when I hear people ask about, well, I know there are discussions with the BRICS and others about what will happen there. Those are interesting discussions that we monitor. But let us be very clear-eyed about this. We will still have to buy imports in US dollars, and we still have to pay debt in US dollars. So there are compelling reasons for us to maintain the direct relationship, the peg, between the EC and US. Now, let me say one more thing. It is a fact that there are discussions about the dominance of the US dollar, and some of it, to be honest, has come about with the war in Ukraine and the perceived weaponization of the US dollar in respect of our sanctions, the imposition of sanctions. I don't want to get into the geopolitics, but we can be unaware of the global environment. So if you look at what has happened with world trade with respect to the denomination in US dollars, there was a time when it was probably around, say, 70% of all invoice trade was USD, US dollars. That has come down to maybe around 59% over the last 10, 15 years. It's dropped. But it is still, by far, the most dominant. And the US dollar, one of the reasons why it has, one of the big things it has going for it is that it has the biggest and most liquid financial markets in the world. So even the same countries, or some of the people who are talking about diversifying, have significant investment in the US for the very same reason of the liquidity and the access. And in the environment with high interest rates, as they are now, the Fed interest rates are now about 5%, the US market is a very attractive market. So I don't see any imminent shift in that, but I will say this is something that we obviously monitor, but for the reason that I gave, the peg will continue.
Right. I don't want us to, well, could I?
Ask your other question, and then we'll see who else
Okay.
has a question.
This one might be a bit unfair to ask you, the members of the panel. So maybe I should reserve it for another. But it surrounded the Bank of St. Vincent and the Grenadines. I know the acquisition of FCIB took place. Now we have transfer of assets and liabilities from First St. Vincent Bank. I was just wondering what that would mean for the shareholders of the Bank of St. Vincent and the Grenadines. But again, it might be an unfair question.
Yeah, I think the chair and managing director, you have a heads up, so when you have your media conference,
right,
you might be able to answer the question about shares, what that means for the shareholders.
Right. All right. Thank you very much.
Thanks for your questions. Anyone else?
All right, Greenaway the news again. Just a follow question, curiosity maybe. The employees, the staff of First Caribbean, what's their position?
First St. Vincent.
First St. Vincent, sorry.
Yes.
Yeah.
Right. So I don't have the latest. I know there is a discussion going on. So let me just be general, and the team can be specific if you have ability so to do. The staff will ultimately be severed, I expect, under the laws of St. Vincent and the Grenadines with appropriate respect for the laws. So they'll be treated fairly based on the labor laws.
Okay.
The receiver will probably retain a small number to deal with the business of overseeing and ultimately winding up. The acquiring institution, Bank of St. Vincent and the Grenadines, will have the option, because it has additional depositors and loans, to take some staff. And I'm told that they're looking at about 4 staff. Now I'm saying looking because they make the decision. That is the decision of Bank of St. Vincent and Grenadines, not us. So we can't impose anybody on them. Now at the time of receivership, there were 11?
Yeah, about 14.
14 members of staff. So potentially 4 might be going to St. Vincent, Bank of St. Vincent and Grenadines. I said potentially because again, we have to reserve the right. They may take more, they may take less. But that's probably not going to be less, but that's their position, that's their decision. The receiver will take a couple as well. I don't know, 2 or 3. The receiver has to make that decision in his own deliberate judgment. So at least half of the staff will be certainly, will be employed. Lots of employment is not something that's desirable ever, but hopefully there'll be new opportunities for them when they get the packages that they could pursue.
Okay, the other thing, you spoke about the, I'm saying NCB because when I left St. Vincent it was NCB, banks and so on at the bank. I'm curious, is the interest payment going to now be the same, or are there going to be changes?
Well, I don't want to put the managing director on the spot.
That will be
It's
decided.
all media conference, but if you wish to step to the microphone at any point in time, we will give you the option to do that. Because they're banking business, so we can't speak for the bank on that.
Okay, so it would
But-
depend on their banking.
But just to say, I mean, the loans and the deposits go over, right? In
Right.
some cases, the loans and deposits are tied, they're either collateral or at least you have a relationship. So you wouldn't expect deposits to move and loans to not move. First St. Vincent Bank is now closed, so obviously
Everything will
deposits
be
and
different.
loans have to move, right?
Okay.
You have to treat. So customers will be expected to continue to service their loans in the normal way. That doesn't change. The obligation doesn't go away with the closure. Let me be very clear. I want to repeat that because that might be breaking news for some. Let's be very, very clear.
So I might be hoping
Let's
it
be
go
very,
away.
very clear. Whether your loans are in Bank of St. Vincent and Grenadines or they're in the receivership, your loan before May 26th, when the bank was intervened and a receiver appointed, those loans have to continue to be serviced in the normal way. Those loans, those obligations do not go away, will not go away. Okay? So I want to be very clear. So we talked a lot about depositors because obviously people, access to money is an important issue. But to be very, very clear, even as we make access available as of June 1 for most of those depositors, there is a clear, not just expectation, but obligation legally to continue to service your loans as normal. So the only difference is that, the payment is going to Bank of St. Vincent and Grenadines or it's going to the receiver. FCIB, SVB in receivership, right? First St. Vincent Bank in receivership. So it's either going there or it's going to Bank of St. Vincent and Grenadines. But you have to continue to service as normal.
So I guess they will have to wait to know what's the issue with the
Right.
interest
So
payments.
that's why we provided numbers and email addresses because people will have questions, quite naturally. And our expectation is that customers will reach out. So if they call First St. Vincent today or over the next few days to ask a question, somebody will answer and give them a response, give them guidance. If they call Bank of St. Vincent and Grenadines from Thursday onwards, then they will be able to guide them. Okay, where am I? How much? Whatever. But the general guidance now is if you're under 100, up to 100, most of it that's going over. That's it. If it's over, receive it. So make the call, send the email, clarify your position. That's perfectly in order, and that is to be expected.
So they can call the bank until Thursday and
They
get
have
answers.
after Thursday as well. I mean, you can for both First St. Vincent Bank now in receivership and the Bank of St. Vincent and Grenadines. So you can actually call. If I know I have $10,000 in the bank, that is now going to Bank of St. Vincent and Grenadines. I will probably call Bank of St. Vincent and Grenadines. If I know I have 110,000, well, I know I have some portion in the receivership, I will probably call First St. Vincent Bank.
That's
And I know
important for
customers
them
who
to
will
know.
call both, and that's okay too.
I think that is important for customers to know that they can still call.
Same
Please.
numbers.
They could
Please,
still call the same
all
numbers.
right, let me ask Strabak, my colleague here, to just.
And I'm just saying that also on the website for First St. Vincent Bank receivership, there is a FAQ sheet that if they go onto it, they will see various questions, and one might be one that they, a response is there for one of their questions. So there's a list of questions that may clarify their concerns on the website of First St. Vincent Bank in receivership.
And
Right. So just to be clear, customers, go to the website and read that first, see if your question is answered. That would be the first thing you do because that's the fastest way to get an answer. If that doesn't satisfy you or you're not clear, then you call.
you call.
And
now-
if you call and for whatever reason, maybe they're busy taking other customers at the meeting, send an email. Somebody will respond to you. So you have 3 channels
Okay.
to immediately get some information on your status.
and not coming to the bank.
No, you don't need to come in.
No, because a lot of people still doing that.
Well, yeah, but
So
I mean,
just
you come in, you're going
for
to
them
be
to know.
delayed, you're going to have to wait in a queue. I don't know about you, but if I could pick up the phone or I could get some
I think that's the
information,
best way for them.
I would prefer to get it before I go and stand in a line.
No,
You
remember
know?
the
If I
bank,
could get the information directly and I don't need to go in a line, time is money. So you don't want to be doing that. So I'm glad you asked because clearly people were probably thinking the same thing. Let me repeat. First, go to the website. There's a frequently asked questions, list of questions there, FAQs. Your answer may be right there. If that doesn't work for you or you're not clear, then you can call. The numbers have been given to you. And if you're First St. Vincent Bank, then all are the same numbers. So you probably know those numbers anyway. And then third, you can send an email. So you have three options in terms of getting an answer on any question that you may have. But don't go and line up there waiting
Right.
to see somebody. That will probably take longer than it should if people bypass the three channels we mentioned and went and did that first. You're going to have to wait. And I think if I'm a customer, I want to know as early as possible where I stand. Those three channels give me my fastest answers. If I still really need to see somebody after that, well, that could be an arrangement, an appointment that's arranged.
I said that because I know a lot of the persons, I think,
Yes.
from that bank are the more of the older persons. Because,
Right.
it's an indigenous bank,
Right.
and those people believe in that.
Right.
So, I know on Saturday a lot of
Yes.
people were in Kingston line up outside of the bank. I saw them.
Uh-huh.
So that's by reason for telling you
got you.
not. Yeah.
I got
And then I think the next choice for those persons would be calling.
Right.
They're
right.
not going to be using
Right.
the email and all of that first. Their first thing would be to call.
Understood.
Right,
Understood.
and to
Understood.
come and line up. So hence my
Understood.
reason for asking that.
Right. But hopefully we've given options
Right.
so that you ease up convenience.
Thank you very
Yeah,
much.
but thanks for posing those questions. I'm going to ask.
Morning.
I just wanted to know.
All right, no. Let's have the managing director of the Bank of St. Vincent and Grenadines approach us now. Take the microphone, please. No, Derry, we want to hear from you. Please.
I just wanted to note on the issue relating to contacting the Bank of St. Vincent
Yes.
that we, until Thursday, we will not be able to speak to the clients about balances because we won't have that data until Wednesday night. However, we can give them information in terms of what time to come back and so on. But we would not be able to speak specifically because we wouldn't have that information. I just wanted to
Thanks for
just clarify
clarifying that. Do not call Bank of St. Vincent and Grenadines until Thursday, because as the managing director just indicated, they will not have the information, the specific balance information before then. That's why I said earlier, we need a few days to finalize the arrangements and to do the transfer. But you can call for St. Vincent Bank today, tomorrow, and clarify. Come Thursday, you can actually call Bank of St. Vincent Green or access money if you need to access funds. Yes, sir.
My name is William Anthony, approaching from the Vincent newspaper. I just want to know what is the ECCB role in determining interest rates throughout Caribbean and
Interest rates. Okay, that's interesting. All right, so very quickly, we essentially, in the central bank, cover three rates. So if you think about our monetary policy toolkit, there are three rates that we deal with. First is our discount rate. That's the rate at which we lend to governments and our commercial banks or licensed financial institutions or licensees. If it's under 1 year, the current rate is 2%. If it's over 1 year and up to 15 years, that's our long-term rate, it's 3.5%. So 2% under 1 year, 3.5% up to 15 years. Over 1 year and up to 15 years. That's one. The second rate that we administer is the minimum savings rate. The minimum savings rate. That rate, as you know, is 2%. And I think, if I recall, 2013, I think was when we reduced it from 3% to 2%. Yeah? The minimum savings rate. The minimum savings rate is essentially if you have a deposit, say a savings account, that's the minimum that the banks must pay you in interest. 2%. Yes? Minimum savings rate, 2%. And I might add, it's one of the highest rates in the Caribbean. Most countries, if you look, either do not have a minimum savings rate, they've liberalized completely, and the going rate is under 1%. And that is because of the excess liquidity to maintain a minimum savings rate. I know Derry, the managing director, will want me to say when will that be moved, because the banks have engaged us on that, and we have indicated that we will have those discussions at the time of the introduction of deposit insurance, which we're working on now. The third rate, sir, so just to be clear, the discount rate, the banks at which we lend, the rate at which we lend governments and commercial banks or licensees, one. Secondly is the minimum savings rate. The third rate is the exchange rate. The exchange rate, the PEG, which is currently 1 US 2.7 EC. 1 US 2.7. 1 US dollar is equal to 2.7 EC. That's the exchange rate. So those are the three rates that we actually control. And every few months, when we have our meetings of the Monetary Council, which are our finance ministers, we always recommend a decision on these rates. Obviously, we're not changing the exchange rate, so we will simply say, that is to be maintained, the minimum savings rate maintained, the discount rate, it depends. We had not done anything on the discount rate until the pandemic. So for 17 years, that rate was at 6.5%. When the pandemic occurred or broke, we dropped it, slashed it to 2% and 3.5% respectively. We will review that as the economies recover, as tourism in particular rebounds. But those are the three rates. So, let me summarize by saying, the mortgage rates that you pay, for example, have nothing to do with the central bank. Well, very little. It has much to do with competition amongst our financial institutions. So you might be old enough, like I am, to remember when mortgage rates used to be 10% or even higher in our currency union, in St. Vincent and the Grenadines. Today you can get a mortgage for 6%. What? U6, right. Perhaps even slightly lower, but 6. And guess what? That rate is actually lower than what you get in the United States right now. I mean, a mortgage in the United States, a 30-year mortgage might be close to 7%. So the rates that you get in the currency union are actually lower. They're very competitive. And a lot of that has to do with the fact that there's significant competition amongst the financial institutions, not just the banks, but also credit unions as well. So that has redounded to the benefit of the customer or customers. But in some, so let me add, you didn't ask, but let me add. Our central bank cannot bring down inflation. If we could, we would. If we could, we would. What we have in the region is imported inflation, again, primarily out of the US because of our peg to the US, because we are a major trading partner. And we need and we rely on the US central bank, the Fed, to get interest rate, to get inflation down. And so you've seen the Fed since last March aggressively raise interest rates from 0 to 2.5 to now over 5%. All right? Hopefully, inflation is starting to come down, not nearly as quickly as we would like, but it's coming down. Hopefully, we will continue to see that downward trend so that inflation continues to come down. Before this current spike in inflation, before the pandemic and so on, we would average 2% or less, sometimes even negative. Yeah? Negative inflation, yeah. That actually is a thing. But since, the pandemic, since the war and all of these things, we've seen the hikes, supply chain disruptions. To be honest with you, the supply chain disruptions have eased considerably, but what has exacerbated the situation is the war in Ukraine, related sanctions, and also, of course, some other things around spending, government, some of the stimulus stuff. But the point of the matter is inflation is coming down, but there's nothing ECCB by itself could do to bring down inflation. If we could, we would.
Besides the drop in the mortgage rates and so on, you think anything could be done like in other loans and so that other people get? Even from the people I'm used to getting strong, like credit union and all those things.
Yeah, I think rates are generally more competitive. What more could be done? I guess it's for the financial institutions to determine, but I think competition helps that. And like I said, there may be fewer banks, but you do have credit unions that are very active. You also have other non-bank financial institutions in St. Vincent and the Grenadines that are also in the space offering loans. So all of these, they're competing. And customers are looking for where they can get the best rates, the best deals. So I think competition is a key driver of lowering rates. That's really what I'm saying.
The ECCB encourage those kind of things that you're talking about?
Encourage?
Like the non-banking places them to get in financing and so.
The institutes are big supporter of credit unions, for example.
No, not credit union.
Other non-banks? So there are a few...
Business places and so on.
There are a few, well, just to be clear.
Sorry, no, I guess you find like quotes, etc.
Yeah, well,
For these services.
so there are a few non-banks that are licensed under the Banking Act, right? But then you have other non-banks. Most of the non-banks are regulated, supervised by the local regulator, like the Financial Services Commission. Yes? So whether that is credit unions, insurers, money transfer agencies, hire purchase agencies, yeah, those are regulated or supervised by the national regulator, the FSC, the Financial Services Commission, not the central bank. Now, we do have regular discussions with all of the regulators so that we can work together, because it's a shared space, it's a single financial space. We therefore need to work together. We have a single banking law. We hope to eventually have a single insurance and pension law, and also a single cooperatives law. Those are things that we want as we strengthen the space, really make it truly single, so that you can operate in any one of the 8 countries with the same law and with the same basic regulatory environment. That's important for business and for customers moving to and fro across the currency.
Recently, you expanded your digital profile. You want to give me an update on that?
Right. Before I go to digital currency, this is proven to be a much wider ranging media conference than I had anticipated, but you have your question, we'll give you an answer. Do we have any other question than First St. Vincent Bank? I don't want to make sure we don't lose sight of that. Before I come to you, sir, but anyone else on First St. Vincent Bank?
You kind of addressed this, but just for clarity.
Yes.
When did you first pick up that something was wrong with First St. Vincent Bank, the finances?
So I think in the media release we indicated, and again we try to be as transparent as possible. We have been monitoring closely, especially over the last, say, 8 years. And
Even before that.
Go ahead.
Sorry, even before that, because we would have went into the bank around 2005, and we'd have seen certain issues. As with other institutions, we'll have remedial action document for them to correct these issues. And so this long drawn-out process in correcting the issues, we would have written to them, and we went back in, look at where they're at with these issues, and then we had to issue directive. So they came under enhanced monitoring about 8 years ago. So we had them under enhanced monitoring around that time, around 2016, 15. So we were really looking at them and seeing how they can, because they were in contravention of certain requirements of the Banking Act, and which we should not allow. But because of our forbearance, and see how we could better see how the institutions could correct their issues, as well as we want to take the depositors into consideration when we are trying to resolve such issues. So, since about 8 years ago, under enhanced monitoring.
right. Thank you, Shwabak. So just to be clear, forbearance is a big word to say we gave them time to turn the situation around. So we were reasonable. Some would say we gave them too much time, one might argue, but we gave them time. I mean, I don't think anyone can say in good conscience that the ECCB has acted prematurely in this matter. The board and management were given time to address the issues. Because as a regulator and supervisor, you will see things sometimes that need to be fixed. As you said, remedial actions. And then you come up with a timetable to address them. Unfortunately, despite the extended time given to turn the situation around, that was not possible, and in our judgment was not going to happen. So that is how we came to this point. All right, if there are no further questions at this stage on the First St. Vincent Bank, let me quickly turn to digital currency. Say very briefly, in March 2021, in the middle of the pandemic, to boot, we launched our digital currency, becoming the first currency union in the world, certainly one of the first central banks in the world, but the first currency union in the world to launch a digital currency. It's interesting because when we did it, we were deemed to be, very innovative, and it was not yet seen as mainstream Today, over 70% of all central banks are involved in either the development of a digital currency, either they're doing the research or they're working on a pilot. And that includes large banks like Bank of England, that includes even the United States, the Federal Central Bank, that includes obviously, all Bank of Canada and others. So we had started with the idea of launching it, piloting in 4 countries. While we were getting ready to launch in 4, we got a request in the pandemic for other countries, all 8 countries, to benefit. Countries felt, well, we want to benefit too, we want to be part of this pilot. So we expanded the pilot from 4 to 8 countries. So today, all 8 countries have Dcash. It was an incredible feat for us to get to that point as early as we did. It took a lot of effort, and like I said, we did it in the middle of a pandemic. What we did not do very well, and I will concede that readily, is to market Dcash. We are now just starting to market Dcash. So we have hired a marketing agent, a partner, the marketing machine to do prepare the marketing collateral and the campaigns. We also hired local agents on the ground. So in St. Vincent and the Grenadines, we have Ms. Camille Crichton, for example, who is working with us and with the partner to market. So we have started to see some increases in the numbers across the islands, but there's a lot more to be done. We're also having now a reflection about the post-pilot phase. One of the things, for example, that we are working on and we plan to roll out soon is the e-commerce option, the e-commerce functionality, which is important for small businesses to be able to offer Dcash as an option, a payment option. And also, ultimately, to integrate Dcash with the core banking systems. That is not currently the case. So it does add a layer of an extra piece of work because, for example, if you or myself, any one of us wants Dcash, we have to ask our bank or agent to put it into our wallet, to load our wallet. Once we integrate it with the core banking systems, we can do that ourselves using our phone. So that is going to come. But at this stage, we are seeing increases in the numbers. And we believe as the marketing campaign takes root, we're going to see more and more people. And remember, we believe it is still the fastest, safest, cheapest way to move money. Having said that, we've also said, and I'll be very clear and I want to repeat, we have never offered Dcash as an exclusive product or exclusive wallet. We have felt and we continue to feel that it should contend or compete with other wallets. So whether it's Bank of St. Vincent and the Grenadines or any other provider who has wallets out there, you are free, the customer, to choose. And customers will ultimately make the decision based on cost and convenience. Cost and convenience. So we are continuing to promote Dcash. Dcash is going to be around because digital currencies will be around. That's as far as we can tell. Like I said, more than 70% of central banks are now involved in digital currencies. And in fact, the discussion that's going on internationally, and I'll end there, is about how to make these digital currencies interoperable. So how we can create multi-CBDC, central bank digital currencies. Dcash is a CBDC, central bank digital currency. Why? Dcash is a currency issued by our central bank with the full faith and backing of the reserves, the balance sheet of the central bank. You contrast that with cryptocurrencies, and let me just say this. Digital currency, Dcash, is not a cryptocurrency. Cryptocurrencies are those things that have no underlying assets that you speculate on, like Bitcoin, among many others. There's a big difference. Dcash is actually a digital version of the EC dollar. The backing is the same 1 to 2.7, the reserves are the same 92%, the same full balance sheet of the central bank is behind Dcash. So that's a big difference. What we should also point out is that with what we've seen globally with some of the challenges in the cryptos market, the collapse of FTX, among others, there is now a crackdown starting on cryptos because the concern is that customers are getting hurt and will continue to get hurt because many of these cryptos are unregulated. Most of them are, pretty much. And so in the interest of the public, the consumer, the customer, efforts are now being made to provide some regulatory arrangement around that. And as I've always said, once you bring a regulatory perimeter or parameters around cryptos, many of those cryptos will disappear. They cannot stand scrutiny. They cannot stand scrutiny, whether it's AML, CFT, safeguards, whether it is the their governance arrangements, many of them cannot stand scrutiny. And frankly spoken, the business model of some of those cryptos is not for scrutiny, which makes them problematic for a financial system that wants to be clean and wants to ensure that it functions well, but it does not facilitate illicit actors, like persons engaged in money laundering, financing of terrorism, tax evasion, fraud, among other things. So I've said a bit much on that, but suffice it to say, Dcash is going to be around. Is there any other final question? I know it's the top of the hour, it's 12 noon. I don't see any other questions at this stage. So let me seize this moment to thank everyone who came for this media conference. I want to again thank the Bank of St. Vincent and the Grenadines for partnering with us on this resolution, which ultimately helps depositors in St. Vincent and the Grenadines. That's our primary motivation. Secondly, to also recognize the support of the government of St. Vincent and the Grenadines, because we have in fact engaged the government on support in specific, general and specific ways for the resolution, and the government has responded to our request positively. I also want to recognize our very, very hardworking team. They have been on the ground for the last week and a half.
Since the 15th.
Since the 15th of May. A couple of them are not here. They're actually at First St. Vincent right now, working. But I want to recognize Schwabach Keynes, Director, Financial Sector Supervision Department, whose work led the team. Damil James, Shamir Francois, they've been on the ground since the 15th of May. I also want to recognize our Senior Legal Officer, Ms. Jamila Aline. Obviously, there are legal issues when you do this. We have to follow the law carefully and faithfully. And so, Jamila, thank you very much for all of your hard work with the rest of the LSD team. And our Corporate Communications Chief, our Director, Shamalan Kirby. By the way, Shamalan should be a familiar face to many of you because she's a famous daughter of the soil. I think she used to be at API, right? Yes. API, so you would have known her from the days at API here in St. Vincent and the Grenadines. The team has worked very hard, with support, of course, from our colleagues at headquarters. And finally, to thank you, members of the media, because without you, we are not able to get this information out. So we thank you for doing just that, for the questions today, as well as the fact that you will share everything with your audiences. Receiver, thanks for partnering on this as well. You are a very important part in this process, and I want to thank you, David, and your team for taking on this assignment. With that, many thanks. God bless.